Today, let us see the third technique of financial statement analysis, that is trend analysis. The first two techniques will observe the changes in component only for 2 years, that is the base year and current year. So with the help of that two techniques, it is not possible to observe the changes of component in financial statements over a long period of time. It fails to observe the changes in components of financial statement for a long period of time. So the third technique will help us to observe the changes over a long period of time. For example, for 10 years. This method observes the behavior of components of the financial statements for a long period of time by taking oldest time as base and evaluating their comparative values for subsequent year. If there are 10 years, the 10th value is compared with the first year, and what is the changes from the first year to the 10th year that we are going to observe. And we can see the link of every component with another. Let us see the 9th problem. Sir Osborne Smith Limited achieved the following profits over 5 years. Calculate the trend values taking the operating profit of the year ending June 30th, 2005 as the base year. So here we have to take 2005 as the base year, and we have to compare the profit of every year with that base year. So 2009, 2008, 7, 6, 5 and 2005's profit also given. So this profit we have to take it as a base, and we have to compare it with the current year profit with the base year profit, and what is the changes in percentage we have to calculate. Let's go for this. Calculation of trend values. Here's a statement. Period operating profit, trend values, profit for the year divided by base year profit into 100. Let us calculate from 2009. 30th June 2009, profit for the year is 40,500. So trend value is, we have to calculate profit for the year 40,500 divided by base year profit. So they only said that base year is 2005 and its profit is 23,025 into 100. So we'll get the trend value, that is 175.90%. Second, 2008, its profit is 29,750. Compare it with the base year profit, and you will get the trend values as it is 129.21%. So 23,025 it is 100, and 2008's profit is 29,750. So there is increase in profit from the base year to the current year, that is 2008, is 29.21%. So like that we have to analyze. Third year, 2007, 35,125 is a profit for the year divided by base year profit into 100, 152.55%. 2006 profit 22,100, and compare it with base year profit, you will get 95.98% trend value. So there is a reduction in profit from the base year to 2006, that is by 4.02%. There is a reduction. And 2005, that is only the base year, so there is no changes in the profit. As it is a base year, it is 100% only. Next. 10th problem. JB Taylor Limited provide the data about sales and inventory for a period of 6 years. Determine trend values keeping the earliest year's figures as the base. So we have to take the base year, that is the earliest year of the period. So we have to take earliest year, that is 2009, as base, and we have to compare the values of every year with that year. So sales and inventory information given, so we have to calculate the trend values of sales as well as inventory. Here Sales trend, current year sales divided by base year sales. Base year sales will be of 2009. Inventory trend percentage, current year inventory divided by base year inventory into 100. For inventory also base year is 2009. For 2009, trend values, it is 100% because that is only the base year. For 2010, 1100 is the sales and base year value also 100, so there is no changes. That's why we got 100% only. Base year value and the current year value, that is same. There is no changes in sales from the base year to current year. Whereas in inventory, there is a reduction in inventory maintenance, that is 210. In base year it was 220. There is a reduction. 2011, where sales is 1100, compare it with the base year sales 1100, trend value is 154.55%. There is a increase of sales from base year to current year by 54.55%. And inventory 10, it is 280 in the current year and compare it with the base year, and there is increase in inventory maintenance by 27.127%, and inventory trend in percentage is 127.27%. In 2012, 1900 sales and we got trend values 172.72%, and inventory 360 in current year and base year compare, and we got 163.64% trend values. And in 2013, current year sale is 2500, base year is 1100, value of trend is 27.2%. Inventory trend 218.82%, as inventory of that year is 480. 2014, current year sale is 2300 and trend value is 209.09%. And inventory trend 400 is a current year inventory and inventory trend value is 181.81%. And 2015, 2000 is a sale for the current year and the trend value is 181.81%, and inventory of that year is 410 and inventory trend is 186.36. From the base year to 2015, there is an increase of inventory by 86.36%, and sales, there is an increase in sales by 81.81% as you compare it with the base year. So you can see the changes in these 6 years, where the base year is 2009. So every year there is a steady increase in the sales. And in case of inventory also, but in 2010 there is a reduction in inventory. After that there is a increase till 2013. Again in 2014 there is a reduction in inventory, but in 2015 again it is in an increasing trend. Next, problem number 11. CD Deshmukh Limited furnishes the following data. Determine trend values and make an analysis of that base. So here sales, debtors and inventory given. Here base year will be 2010 as it is the earliest year. And they has to make an analysis of analysis also. So that is, we have to observe the changes and we have to comment on it. Let's go for that. So 3 components are there: sales, debtors and inventory. So we have to calculate trend values both for 3. Earliest year we are taking as a base, that is 2010. So trend values of base year, it is always 100. In 2011, sales trend is 104% as sales of that year is 31,200. Debtors 7,900 and trend value is 98.75% because there is a reduction in sales, reduction in debtors. Inventory trend is 103%. Inventory of that year is 3,100. In 2012, sales trend is 120% as sales is 36,000. In debtors trend is 98.75% as debtors of that year is 7,900. and inventory trend is 116.67%. Inventory is 3,500. 2013 inventory sales trend is 150%. Sales is 45,000. Debtors trend is 112.5%. Debtors is 9,000. Inventory trend is 200%. There is a double in inventory trend. That is 6,000. Base year is 3,000. Now we have to make a analysis of these trends by observing. So you can observe the trend of sales. Sales is increasing from 100 to 150%. There is a steady increase. There is a steady increase in sales. So initially it was 100, then it is increased to 104%. Again it is increased to 120%, and in 2013 it is increased to 150%. There is no reduction. There is a movement upward. Then debtors trend. Initially it was 100%. That is a base year only. And we are comparing. There is the amount of debtors is fluctuating. It has come down in the first 2 years, and it is increased to 112.5% in the third year. And inventory for 2011 and 12 has increased very moderately, but in the year 2013 inventory went up to 200%. So there is no order in. Sometime it is increasing, and that trend is not order. It is highly fluctuating.